Hello, everyone. Good morning from this part of the world, and depending on what time zone you are tuning in from, I want to wish you a good afternoon and good evening. I'm excited to welcome you all to our first edition of the Forex Morning Mastery after missing out on last week Friday's session. Well, it was a painful one, but there's nothing I can do about it as I needed to accompany my daughters for their tournament in Lagos, Nigeria. That's the Nigerian National Chess Championship for 2024. It's only once in a year where all the best chess players across the nation comes together to play. And of course, it was quite an exciting experience as my daughters did pretty well across board, though we had a little bit of disappointment along the way, but they were able to clinch the third and fourth positions. Michelle, who is my first daughter, clinched the first position. I'm trying to look for a picture here. So this is she. That is Michelle. That's my first daughter. She came in third after having 5 all over 6. She won 5 games out of 6 games. And of course, sister, which is the junior one, came in fourth after winning 4 games out of 6 games. So that is Amanda right there, my second daughter. So it was quite an exciting experience for every one of us. We had a blissful one, and they also gained some experience along the way. So thank you everyone for those of you who are checking in on me on how things are going. I see your comment C40. So thank you very much for checking in. So that was that on the National Chess Championship, and we are right back into the business. And of course, there have been quite some interesting development across the global market. During the course of the weekend, we saw rising geopolitical tensions, as we saw, especially in the Middle East, which increased over the weekend after the Syrian rebels took control, forcing President Assad to flee to Russia. Then we also have the new development from China, where it was reported that the People's Bank of China announced on Saturday that they bought 160,000 troy ounces of gold, the first time in about 7 months, which is definitely a good news for gold buyers. And this could be a platform that could send prices of gold higher again. Then we also have challenges facing the risk sensitive GBPUSD pair, which currently is gaining ground amidst a cautious market sentiment ahead of the US Consumer Price Index, which is expected to be the main event for this week, and that is coming up tomorrow. And of course, market participants are looking forward to this data, which is going to be guiding Fed officials on their decisions and influence in other currency assets as well. So it's going to be quite an interesting session we are going to be looking at today. And so excited to have you join me. And of course, you do not want to miss out on the interesting and simple trading setup we will be coming up with after taking into account the fundamental and technical aspect of the market. So once again, I'm excited to welcome you all on board. And for those of you who are joining me for the first time, you're highly welcome on board. This is the Forex Morning Mastery. We usually run this 3 times in a week. That is Mondays, Wednesdays, and Fridays. So today was a one-off situation. In fact, most of us are not even aware that I'm doing this session this morning, except for those who catch up on my update on the Telegram platform. So it runs 9:30 a.m. West African time, 8:30 a.m. UTC. And please note, this is not a signal service platform, but an educational avenue where we come together to become an independent forex trader, and of course fine-tuning our skills in understanding the behavioral patterns of market participants through the lens of price action and fundamental analysis. So once again, you are highly welcome on board, and I encourage you to actively engage in the comment section. So with that being said here, and do not forget everyone, one way you can actually support this community to grow is by clicking on that like button. Your likes are very valuable to me, and of course it also goes a long way in helping us be identified by the YouTube algorithm, which will push this video to a wider audience of traders who may find this content beneficial to them too. So please click on that like button, and thank you very much from the bottom of my heart. So with that being said here, we will be diving right into the business. And of course, as always, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today and for the remainder part of the week. And based on the asset we are going to be looking at for this week, in fact, this asset has really moved significantly in a particular direction. So we are in fact looking for ways to probably see how we can join the recent momentum. So we are looking at the USOILSPOT, we are looking at the GBPUSD, and of course my favorite, which is the XAUUSD, popularly known as the gold spot. And based on this asset, we are going to be focusing on economic features from both the United States and the United Kingdom economic docket. Now, we usually focus on high impactful event. However, on days where we do not have high impactful event, we have no other choice than to include mid-tier economic features so that we can have a broader view into what market participants are looking forward to make informed trading decisions today. Now, if we look at the economic calendar for this week, I've already filtered in the mid-tier economic features. We had the what's it called again? The Ramsden speech yesterday. That's the deputy governor of the Bank of England, and of course, his narrative was a little bit of a hawkish sentiment to the market, as he emphasized that the policymakers will remain vigilant and amidst the current heightened economic uncertainty, and of course suggested optimism for the UK's financial stability, which for me I see as a positive signal. And I think the pound sterling had capitalized on this narrative to push price a little bit higher in the last 24 hours. Now the question is, will this momentum be sustained, or will the strength of the US dollar currently reverse the current momentum, which we're definitely going to be looking at? So for the GBP USD funds, I expect you to stay tuned in on that one. Then for today, Tuesday, December 10th, we do not have any high impactful event to look forward to. So I had to include some mid-tier economic features. And after doing that, we only have two economic features from the United States, both of which are coming in at exactly 1:30 p.m. UTC. That's about 2:30 p.m. local time. And the first one on the list here is the non-farm productivity report. Now, for those who don't know, this data here measures the efficiency of workers in producing goods and services, and of course it excludes the farming sector, and it's going to be capturing the whole of the third quarter. So that means the last 3 months is going to be put into picture. And of course, the data here will be giving market an insight into how well the productivity has been. If productivity improves, it indicates that the economy is becoming more efficient, which can strengthen the US dollar, and as investors will see it as a sign of a sustainable economic growth. However, if there is a lower productivity, then that will suggest that there is a potentially weakening economic struggle, and this could also influence the US dollar negatively. And in terms of inflation, this could also keep inflation in check. That is, if the productivity is higher, which is also a very, very good signal. So what we are definitely going to be looking out for from a theoretical standpoint is what the actual data will give us. Will it be lower than what the market is expecting or the previous month, or is it going to be higher, or is it going to maintain what market participants are expecting? Now, if we look at the data here, for the previous month, it came in at 2.2%, and consensus, that is market participants and economists, based on what is on ground, are projecting a 2.2% expansion again for the last quarter. So we look forward to see what the actual data is going to be like. So that's 1:30 p.m. UTC. Then we also have the unit labor data, which will also be released simultaneously as a non-farm productivity report, and this obviously also measures the cost of labor required to produce 1 unit of output in the last quarter. So it's also a productivity report, and of course, if the unit labor cost rises, it's going to signal inflationary pressure as businesses face higher costs, and potentially prompting the Fed Reserve to adopt a more hawkish stance. And reverse is the case if the data comes in lower than what market participants are expecting. And if we look at it from the data's perspective, we have a 1.9% for the previous quarter, and there is a projection that this last quarter could also project another 1.9%. So we'll look forward to see what the actual data will be on that one. Will it be just as market had expected, below expectations, or even beyond expectations? So that's one through is 1:30 p.m. UTC. Then tomorrow, since we are not going to be having the Forex Morning Mastery tomorrow, so I would like us to look at what we are going to be looking forward to tomorrow to guide our trading decisions. And one of the major events for this week is the Consumer Price Index, popularly known as the CPI data. And for those of you who do not know, for those of you who have been with me for a while, you definitely are familiar with this. This is a monthly report that measures the average changes in prices of goods and services in the last 30 days. And of course, it indicates the inflationary level in any particular economy. So a higher CPI usually signals rising inflation, which may lead the Federal Reserve to maintain the current interest rate or even increase the rate depending on how strong this data will be. And if the data comes in lower than market had expected, it may prompt rate cuts, weakening the US dollar at the same time. So everyone will definitely be watching for this report closely as they influence the monetary policy decisions, impacting the value of the US dollar as well. So anyone who is trading the US dollar this week is definitely going to be looking forward to this report. And one thing I would also like to say here is that the anticipation of this event may change the current market dynamic, as we may see tendencies of major key players in the market stepping aside, waiting for this data to come in before making any aggressive bet, and this may likely lead to extended sideways trading activity. So we are going to be taking this also into account while we review the charts we are looking at from a technical standpoint. And then tomorrow, on Thursday, we are going to be looking at two important events as well. The top of the list is the producer price index, which is also an inflationary data measuring the average change in price that producers right now. The other one is from the consumer's perspective, but this is from the producer's perspective. So it gives us the average change in prices they receive for their goods and services in the last 30 days. So it's considered to be a key indicator of inflation at the wholesale perspective. And just like the CPI data, a rising PPI or a higher than expected PPI will suggest increasing production costs and which can lead to higher consumer prices, that is inflation, higher inflation, and potentially prompt the Federal Reserve to raise interest rates, hereby strengthening the US dollar. And the reverse is also the case if the data comes in lower than market had expected. So the timing for the producer price index is 1:30 p.m. UTC on Thursday. So we want to be marking that one out on our timing too. Now look at what is expected here. Market participants, economists are projecting that the data will likely be higher than the previous month, which is at 3.1%. So economists are projecting that we may likely see a 3.3%. So we look forward to that one too. Then simultaneously, when the producer price index will be released, is a labor-oriented data. That is the initial jobless claim count, a weekly report that gives us an insight into the number of people filing first-time claims for state unemployment insurances. Now, a larger than expected number indicates weakness in the labor sector, which obviously could dovetail to negativity for the US dollar. And if we look at what the data here is saying, market participants and economists are projecting a lesser figure compared to the previous month, which is a promising expectations here. So it appears that the expectation from the US economic calendar is quite hopeful, and this could likely reverberate the US dollar and give it enough room to push higher before that event happen. But we're still going to be looking forward to what the actual figure is going to be like. So these are the major events we are looking forward to in the next couple of days: the producer price index, the initial jobless claim count, consumer price index, and of course today we are looking at the non-farm productivity report and the unit labor cost report. So all of this should be kept on our radar as we continue to monitor price action. So I hope I have made myself very clear on this one. And with that being said, let's move right into the business for today. So the first asset we are going to be looking at this morning, of course, is the usual USOILSPOT. And on this one, I would like us to hold on a little bit because I have a position running at this moment, and I would like to move my stop loss to break even. So please give me a moment, please. Let me quickly do that right away so that I do not get caught up in any sudden pullback from this area. So 67.83. All right, so sorry for that break. So the first asset we are looking at this morning is going to be the USOILSPOT. And on the US All Sports, we have quite an interesting situation going on right now, as we have seen that since the beginning of the week, the momentum has been looking positive in favor of the buyers. And what are the reasons behind this recent bullish traction? Remember, while we were trading the US All Sports last week, we had a couple of decisions, like we bought during the first half of the week, and of course we sold during the second half of last week. And as we are seeing things right now, and based on the recent development in the global landscape, it appears that the path of least resistance for crude oil prices is looking to the upside. And now, why have I said this? Well, if we look at things from the geopolitical perspective, the heightened tension in Middle East, along with the overthrow of Syria's president, amplifies the geopolitical risk, which obviously could support crude oil prices. Then we also have the delayed planned supply increase by the OPEC Plus members, and they've delayed the supply increase to April of next year and extended cuts until 2026. And this, for me, is a sign that signals that there's going to be a supply control that helps stabilize prices, which is another important factor that could favor crude oil prices, or let me say favor demand for this particular commodity. Then, between Sunday and Monday, there was also a new development from China. Remember, China has been struggling in the last couple of months. Demand from China has been low due to not too good economic buoyancy. The buoyancy of China's economy wasn't really good in the last couple of months, and it appears that the Chinese government are trying to put some things in place to revive that economy. And if this is possible, this will be good news for buyers. As you all know, China is the largest importer of crude oil in the world. And if the economy is not doing very well, it will definitely dampen demand in the market. And if there is a revive in that economy, definitely the expectation of an increased demand is very possible. So at this point, we heard that China's government is recently deciding to loosen its economic policies to encourage more spending and investment. So specifically, they are now doing what we call a moderately loose monetary policy, just like what Japan had done in the last 1 year. But in this case scenario, it is not as aggressive as that of Japan. So it's like they are making borrowing money much more easier and increasing government spending on projects. That's like an aggressive fiscal measure. Now, these changes are expected to boost economic activity in China, which is a major buyer of raw materials like the crude oil. So as a result, a global demand for this commodity could likely increase, and which could also go ahead to support the prices of oil. Now, that is one thing that we also want to bank on when it comes to the crude oil prices. Now, for me, the path of least resistance for crude oil remains to the upside based on this market dynamics. However, we will not ignore the chances that sellers could also come into play. Remember, since the second half of last week, we've noticed bearish pressure in the market. So it would not be reasonable that we ignore the potentials that sellers could also come into play. Now, one of the concerns that sellers could be banking on is the recent Saudi cuts. Now, Saudi Arabia has reduced prices for Asian buyers. Now, what does this mean? It highlights worries about weaker crude demand especially from China. So because there is a weak demand from China, they've reduced the cost of oil, oil sell to this region, which is a concern for everyone in this particular market. And of course, these concerns about oversupply is also in play, where we saw from the U.S. That production for crude oil has increased significantly. This report was from Baker Hughes, which reported an increase in oil and gas rig count in the United States in the last couple of months, pointing to higher domestic crude oil production, which could weigh in on oil prices. So we have a counterbalance that could negate the bullish perspective that we have in right now. So we'll try as much as possible to take this into account while we review the current market structure. So the current market dynamic, let me just give a quick summary of what this is all about. The current landscape suggests that while geopolitical and policy-driven factors offer upside potential in crude oil, structural issues like demand uncertainty and increased U.S. output present challenges for sustained price appreciation. So how is the market participant digesting this information? Now, this definitely will reflect on the chart as price action. So let's go right into the chart and let's see what this is doing and how market participants are behaving. Now, the first thing we are going to be doing right now is to scale up into the higher time frame, that is the 4 hours time frame, where we will be having an holistic perspective into what is going on here. So I didn't go too far here, so I only took into account the character of price action since the mid-month of November. That's an historical data of about 3 to 4 weeks. And what I was able to come up with here is a robust demand zone. Now, despite the fact that price action has been on a downtrend, you would have noticed that ever since then, anytime price drops into this area between the $66.50 level and the $67 area, we notice buyers coming into play, pushing price further to the upside. Look at how it has been very difficult for sellers to break through this level. And in fact, last week, despite that strong bearish momentum we saw during the second half of the week, we saw that as soon as price got into that $67 area, we saw buy pressure resume from that particular area, making it a robust demand zone to work with. Now, with that being said here, I was able to identify my key level along that $67 area, and of course you know how we use our key level. As long as price remains above them, we shall continue to look out for patterns and structures that supports the idea of buying that asset. Now, with the way things are going right now, price continues to remain above the key level, and secondly, remains above the support line of this descending channel you see here. So all from the structural perspective, from a technical perspective, the path of least resistance remains to the upside. Now, the question we need to be asking here is, how far will this bullish momentum go? Well, it has been bearish so far, as you will see. Lower highs, as you will see here. And we also have another resistant line of that descending channel somewhere around the $68.50 level. Will price action ever get into this area? So we are looking at about 100 pips more of potential room to the upside, and if possible, a breakout of that structure could further increase the chances of maximizing the potential of that bullish move. Now, let's scale down into the 1 hour time frame to see how price action had evolved since the new week began. Now, right here on the 1 hour time frame, right along the $67 area, that is our key level for the week, I was able to identify a range bound structure where price was initially for the first 12-14 hours confined between the $67.40 level and the $66.90 area to emphasize the prevailing uncertainty in the market at the beginning of the week. And of course, you know how we treat our range bound structure. Whenever we identify them, we wait patiently for price to either break down the support line to signal selling ideas or break out of the resistance line to give us buying ideas. So I took a swing position here yesterday, which is currently running up with about 75 pips in profit at the moment, and price action is quite at a critical juncture here. So if we look at what has been going on since the beginning of the week, we have a trend line here which had played a significant role in guiding the direction of price action. So let me explain to you what I mean here. So look at what happened. Last week, Friday, we saw this move to the downside from that level. And during the course of this week, we've seen price break out of that structure, broke down the structure again. We had a retest at some point in time, and you will see in the last 1 hour 30 minutes price has been oscillating around that particular trend line. Now, will this be a barrier for buyers again to push price back into the range bound structure we identified at the beginning of the week, or will the buyers be strong enough to break out, retest to push price to find new highs? So you agree with me that we are at a critical juncture at this particular point in time. So we do want to be marking out some levels around this particular area. So I am looking at about $68.15 level, which interestingly lines up with that trend line. So I'll give it a purple color right here. So then for those of us, I forgot to mention, for those of us who may have capitalized on this bullish traction using our analytical approach in this community, well done to you on that one. I will encourage that you move your stop losses and secure the profit right now, because we are heading into a potential volatile second half of the week. Remember, I told us earlier we are looking forward to a couple of inflationary data from the United States, the CPI, which is coming up tomorrow, and the PPI data, which is coming up on Thursday, and this could bring some extended sideways trading activities where key players may start taking some profit off the chart, getting out of the market, waiting for this data to come in before making any aggressive bets. So we need to take this into account. So if you do have a buy position right now, you do want to be moving your stop losses, secure the position at this juncture while we look forward to see how the market is going to react to this important confluence. Now, for me to continue a buy on this position, I would like to see price do a breakout retest of the structure where continued buy pressure shows me signs that sellers are finding it difficult to drop to the downside, and that definitely will welcome more buying ideas. So we are looking at somewhere around the $69 level as our TP target on this one. So that's roughly about 100 pips from this particular position. But mind you, do not forget what I said on the 4 hours time frame about the resistant line of that descending channel we marked out earlier. Now, if price action gets close to that resistant line, there is a high chance that sellers could come in and push price to the downside. And due to this fact, as soon as price gets close into that structure, we move all stop losses, secure our positions, and so that we can mitigate against any sudden pullback that could happen around that area. Remember, I talked about concerns about oversupply, and despite the geopolitical risk, which may limit any significant price increase at this point in time. And I also buttressed this with the increase in U.S. production, where the Baker Hughes report indicated rising oil and gas rig count in the U.S. for the last 2 to 3 months, which is something that could exert downward pressure on oil prices. And if we're taking this into account, this descending trend line here, or let me call it the resistant line of the descending channel, could be that barrier that could push price to the downside. So let's ensure that we mark this out on our chart and move stop losses accordingly as soon as price gets close into that area. So this is my bullish expectation in this particular market. However, in as much as we looking forward to this uptrend scenario today or for the remainder part of the week, we cannot ignore the potentials that sellers could also come into play, considering those factors I mentioned earlier. Now, this descending trend line here could be a barrier to at this point in time if we begin to see a reversal setup around that area. Now, reversal setup, what do I mean? It could be a double top structure, a head and shoulder pattern, or a rising wedge where the breakdown retest of the neckline could incite a sell off. And if we look at that, we are looking at a minimum of about 60 pips to about the key level area should be the barrier or this trend line. So that's about 150 pips thereabout. So we don't know yet what will happen. So we are at a crucial juncture where, depending on what price or how market participants react to this price level at a $68.50 level, will determine what our next line of action will be. A breakout retest definitely will welcome more buying opportunities here. However, if a reversal setup evolve here, a breakdown retest of the neckline of that reversal pattern could incite a sell-off. And as soon as price moves close into the 67.60 and 67.40 zone, move your stop losses on the sell positions to secure your position while we look forward to more opportunities. And trust me, I will be with you on my Telegram platforms to give us update as at when due. So this is my simple view on the US oil spot for today. Let's see how the market will play out around the $68.50 level. And I did mention earlier, if you have your buy position active, kindly move your stop losses, secure some profit from the current buy position while we wait to see how the market will react to the $68.15 level. So that is my simple view on the US oil spot. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So I see you, Jonah Aruna. Good morning to you. France man, good morning to you. Glad to have you join us this morning. All right. So in the absence of no questions, I want to assume that we are all on the same page. I do hope we've marked out the structures accordingly as we have illustrated so far. Let's see how the market reacts to the $68.50 level. They will continue to guide our independent trading decisions today. And I wish us all the best of luck on this one. So, with that said, here let's move into the second asset on our watch list for this week. So the second asset we are looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And of course, we have seen the British pound gain some traction, immense traction, let me put it that way, about 40 pips thereabouts since the new week began, before we saw that retracement began during the later part of the New York session yesterday to bring the profit margin to about a 0.03% so far since the new week has begun. So the British pound presently is still riding on the positive side at the moment, and of course it has been banking on a couple of fundamentals behind the scenes to run this momentum. However, the question today is whether this momentum can be sustained or not. Now, first of all, let's talk about what are those factors, what are those drivers that has been influencing that positive traction we saw in the GBP USD in the last 24 to 36 hours. Now, one of which is the anticipated economic data on Friday. That is, we are looking forward to the UK economic feature, one of which is the GDP report, right? If I'm correct, yes, we have the GDP report from the United Kingdom economy. We are looking for the consumer confidence report, and of course, industrial and manufacturing production report. And we're also going to be looking at projection on consumer inflation, all of which are coming in during the early hours of Friday's trading session. And this, for me, if we look at the market expectations, the economic expectations here, you will see that they are all positive compared to the previous month. Now, for instance, the gross domestic product for the previous month was a deficit of 0.1%. Now, economists are projecting a 0.2% expansion, and same with the industrial production of 0.3%, as against the previous month of a deficit of 0.5%. And of course, the manufacturing production is expected to expand by 0.2%, as against the deficit of 1%. So the data expected from the UK is looking very promising at this point in time, and this has further helped the British pounds to rise since the beginning of the week. Now, to further buttress the strength is the comment from the Bank of England Deputy Governor, and that is Ramsden, yesterday, about staying vigilant amidst heightened economic uncertainty, which suggests cautious optimism for the UK's financial stability. So all of this had helped the British pounds to gain some traction, though we saw some retracement during the second half of yesterday's trading session. Now the question is, will this be just a retracement of that bullish momentum to anticipate an uptrend continuation, or will this incite a massive sell-off today? Now, if we take all of this into account and consider what is going on the US dollar, which currently is stronger and is resilient, and of course it is driven by we had the robust non-farm pay report for November last week Friday, and we also have market consciously looking ahead of Wednesday's CPI report, which definitely has put some pressure on the British pounds. Then we also have uncertainty about economic conditions highlighted by the Fed's consumer survey report, which creates some support for the US dollar at this point in time. So for me, this balanced outlook showcased that the GBPUSD's vulnerability to both domestic economic data and global monetary policy expectations. So in as much as the potential is looking to the upside, we cannot ignore the potentials that sellers can also come into play, though the British pound is still winning for this week. So how are we going to navigate this market today? What are the chances that buyers and sellers will come to play for the second half of the week? So for us to understand the behavioral patterns of market participants, let's scale into the higher time frame. Let's see if there are any structural pattern or detail that we can actually use to understand the tendency of this particular market. Now, right here on the 4 hours time frame, all I did was to take into account the character of price action in the last 2-3 weeks thereabout. And the first thing you would observe here is that price action has been on an uptrend. Now, connecting the series of higher lows here, you will see I have a couple of ascending trend line which further buttresses the strength of the buyers. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we will continue to look out for patterns and structures that support the idea of buying this asset. Now, in addition to the ascending trend line is my key level, which is duly situated at that 1.272 area. And look at how beautifully this level, or let me say zone, had played a significant role in determining the direction of price action in the last couple of weeks. Initially, this zone was a selling niche where we saw how buyers were finding it difficult to break through, and not until the second half of last week we saw a breakthrough for buyers, breaking out, retesting the structure during the early hours of the week to sustain this uptrend scenario. And in fact, the last 12 hours has seen price continue to maintain some traction right along that ascending trend line to give hopes for the buyers. Now, will this trend line continue to maintain this uptrend scenario, or are we going to be seeing a situation where the trend line will be breached and broken to the downside to incite a sell-off? Well, for me, if you would ask me, I would rather want to see price break down the 1.272 before I want to consider selling. And not only breaking down, I want to see some confirmations like a breakdown retest of the 1.272 or the ascending trend line to incite selling ideas from this particular area. However, if we see some beautiful signals like lower lows and lower highs on lower time frame, this could incite buy pressure. But with the way things are going, the uptrend scenario is still looking very intact. Now let's scale down into the 1 hour time frame, that is our execution time frame, to see what is really going on here. Now on the 1 hour time frame, this is what I was able to come up with. The week initially started with a little bit of consolidation, that is indecision, as we saw price initially confined within the 1.27510 and that key level at the 1.272 to reveal the level of uncertainty at that point in time. However, the breakout of the resistant line triggered buying ideas, which I obviously missed out on as I didn't take this one. But if you took it, well done to you, as we saw price move about 46 pips before this retracement started during the later part of the New York session. And for me, the fact that price action is still oscillating around the trend line and still remains above the second ascending trend line, I still want to consider buying this asset. So if we have missed out on that first buy, I think buying above the 1.27510 is looking very promising. Price will remain above the ascending trend line there, and of course will remain above the resistant line of that range bound structure we identified earlier. And of course we do want to be having enough breathing space for price action, so our stop losses will be right below the second ascending trend line, which is about 25 pips to about 30 pips if you want to extend it into the key level at the 1.272. So that is how we are going to be managing a bullish idea on the GBPUSD. So I'm looking to buy above the 1.27510, and if price continues to climb, I will definitely update us on my trading view and Telegram platform at what level we can actually add more buy positions to maximize the uptrend scenario. Now, in as much as we're looking out for buy, you know how we do it in this community, we also want to keep tabs with the potential that sellers can also come into play. Remember, the US dollar currently is strong at this juncture, driven by the robust non-farm payroll. The US Treasury bond yield too is also picking up at the same time, which still give rooms for the buyers of the US dollar to come into play. And of course, we cannot ignore the anticipation of the CPI and PPI data coming up later this week. That is likely going to be favoring the US dollar. And I want to say that this whole consolidation we've seen right here in the last 12 to 14 hours could be as a result of major key players stepping aside from the market, waiting for this event to come up before making any aggressive bet from this particular area. So I suspect that this extended sideways trading activity could persist into tomorrow's trading session. So let's keep this in mind. And what this simply means is that as soon as price your position gets triggered and price moves a little bit, maybe about 10 pips, move your stop losses to break even, secure the position, and let's wait and see how the market will react. If it comes back, it takes us out at worst case scenario break even, then we can also re-enter again if it goes back in our favor. We'll keep on doing this over and over until it finally stabilizes in a particular direction. So that is our bullish expectation here on the GBPUSD. Anything above the 1.27510 is very good for us to go as regards to buying. Now, in terms of selling here, I would rather want to see price break down the key level before jumping into a sell. And I want to see something like a breakdown, retest of the structure, showing me signs that buyers are finding it difficult to climb back above the 1.272 before I want to start joining a sell. However, I'm also considering the potential of joining a sell even before the breakdown of the 1.272, and that is only if the market permits us to do so. Now, what are the things we will look out for to join earlier than the 1.272 breakdown? Well, for us to join, we already have price breaking down this ascending trend line here. So if we see any sign like a lower low and lower high on our lower time frame, that is like 15, 10 or 5 minutes time frame. So let me give a visual representation of what I'm talking about. Something like a lower low, price comes back to retest, and then we see a lower high, lower low scenario. Then we can actually join even before the breakdown of the 1.272 happens. But please mind you, you do want to be around to move your stop losses accordingly to secure your position as price moves in that particular direction. But I doubt if that will happen. But if it does happen, we want to be on standby to capitalize on that opportunity. Like I said, I still maintain a bullish bias, but if opportunities of selling comes into play, we have no other choice than to capitalize on it. So this is my simple view on the GBPUSD today. So we have a simple structure right here on the 1 hour time frame. I encourage us all to mark it out on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So that is my simple view on the GBPUSD. If you have any questions or you need some further clarifications, feel free to let me know in the comment section. I'm here and willing to be of help in that regard. And do not forget to give the video a thumbs up. Your likes are very, very important to me, a source of inspiration, and secondly, it serves as a way of you supporting this channel to grow. And thank you very much as you do so. So if you have any questions, feel free to let me know. I will take the next 5-10 seconds up and see if there are any before we move into the final assets on our watch list for today. Stay tuned in. All right. So, in the absence of no questions, I want to assume that we are all on the same page. I hope you've marked out those levels accordingly. So, all we just need to do is exercise patience and allow the structures to mature. And always remember the importance of your risk management. Have a well-defined risk management approach for every trade you are taking. Do not risk an amount that is way too high than what your emotions can handle, which is very, very important. This will allow you to remain consistent with our analytical approach. So if you get taken out, you are willing to come back in. We don't know when that movement is going to come in, so we just keep on trying and try until finally price moves and gain more traction in that direction we are looking at. So that is that on that one. I wish us all the best of luck on the GBP USD. So moving on to the final asset. So the final asset we are looking at this morning is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And so far this week, the gold had gained some significant traction thanks to the escalating geopolitical tension from Russia and Ukraine war, the political instability in South Korea and France, and of course the situation in Syria as well. And then recently we heard about the People's Bank of China resuming their gold purchases after a 7-month break, signaling demand strength for the gold commodity. And of course, we also have, while looking at the CME Fed Watch tool this morning, I saw over 85% probability of a 25 basis point rate cut by the Federal Reserve this month. and this of course fueled the sentiment in the market as continue to support gold prices due to this huge sentiment in favor of a 25 basis point cut. However, we also need to take into account some other factors despite this uptrend, this strength in the uptrend scenario. Well, first of all is the hawkish Fed official comments, especially during the later part of last week, and the possibility of pausing interest rate cut cycle, especially after these expectations that Donald Trump's expansionary policy will incite inflation, and this could lead to Fed considering cutting interest rate or maintaining the current interest rate, and this is likely going to limit the gold's upside potential. Then, of course, we also have seen a rebound in the US Treasury bond yield, which obviously we do know that the Treasury bond yield is directly proportional in value to the US dollar. So if the Treasury bond yield is doing very well, it is expected that the US dollar will also follow suit. And if we take this into account, the cap of this uptrend is still cannot be taken out of the picture. Then finally, the upcoming CPI data tomorrow, and then we have the PPI data on Thursday, might introduce some volatility and limit any directional bias ahead of this, or especially the Fed's decision coming up next week. So we may likely see consolidation here, and in fact, we're beginning to see a limiting factor when we are looking at the chart from a technical standpoint. I will be sharing that with you in a moment. But before I do, I want us to understand that this mix of drivers highlights gold's sensitivity to global uncertainty and monetary policy controls, keeping market participants, investors alert to both opportunities and risk. So we need to be very, very careful taking any position on the gold commodity for this week. And before we do, we'll need some significant confirmations, which we are also going to be talking about on. Now, moving right into the chart, our first point of contact will be the 4 hours time frame. Obviously, we do want to be having an holistic perspective into what is really going on in this particular market. And if you look at this structure, it's looking more like what we saw in the USOILSPOT commodity after taking into account the character of price action in the last 3 to 4 weeks. Now, the first thing you will notice here is that we have a robust demand zone. That is very, very important. We need to emphasize that, as you will see that since on the 18th of November, that area between the 2,620 and the 2,605 had played a significant role in limiting the potentials of the sellers. Now, look at what has been happening. Every time sellers come here, we see our buyers push price to the upside. The same thing also happened during the last week of November. And then since the beginning of this month, this area had continued to be a strong demand zone. And what does this tell us? It tells us that sellers have found the price of gold very cheap to buy when price comes into the 2,620, making it a robust demand zone to work with. And of course, it also doubles as my key level for this week. Now, coupled with that demand zone we've identified here, you will see that within this old time frame, we can see a descending channel. You can see we have lower lows and lower highs, and we have connecting the series of lower highs, we have the resistant line of the descending channel, which was finally broken during yesterday's trading session, as you will see there. Then we have the support line right here. Now, the fact that price action had broken out of that resistance line for me is a very good signal that gold is looking promising at this point in time. And in fact, the resumption of the People's Bank of China purchasing gold after 7 months of break for me is a very good signal for buyers, and majority will want to capitalize on that irrespective of what the CPI or PPI data is going to be like. And for this reason, I'm still strongly believing that the path of least resistance for gold remains to the upside. But now what we do not know is how is it going to move? What path is it going to take? Is it going to continue the uptrend from here, that is after forming an uptrend continuation pattern, or will it come back to retest the structure that was broken to incite that uptrend move? And in fact, this retest could happen during the release of the CPI and PPI data, which could strengthen the dollar a little bit, pushing price to retrace to the downside. Then after the market have digested and understood the implication of those data, then they could start buying the gold again after finding it at a cheap price. So these are my thinking around this particular area. So this is just a projection. We've not yet confirmed yet until we have structural detail to do this. Now, with this being said here, let's scale down into the lower time frame, which is our execution time frame, to see how this market has behaved since the beginning of this week. Now, scaling down into my 1 hour time frame, let me quickly show you what I saw at the beginning of the week. So initially we had this old choppy thing during the early hours of the week where price action was confined within the 2,650 and the 2,627, as you will see here, just right below the resistance line of that descending channel we identified on the 4 hours time frame. Of course, you will see that this is a very important confluence, a very crucial confluence where price was initially oscillating around that resistance line before finally deciding to break out of that structure. Now, this is where my focus is going to be. Now, since price has broken out of the structure, you would have seen that buyers have been finding it difficult to continue the momentum, as you will see ever since testing the 2,675 area. Buyers have been finding it difficult to break through that level. So instead, the second attempt led to a lower high, which for me is a signal that sellers may be coming in, and this could reflect potential profit-taking activity ahead of the CPI and PPI data. Remember, I said this earlier, that market participants, major key players may be stepping aside from the market, waiting for this data to come in before making any investment decisions. So as a result of this, we may likely see profit-taking activity, pushing price to come back and retest this trend line that was broken, and of course this key level that was not a key level, that was broken at a 2,640 before continuing the uptrend move. So at this juncture, I would like to acknowledge the 2,675 area, which is our new barrier for buyers since this week started. So we have the 2,675. So let me just mark this out. I encourage you to do the same. 2,675. It's going to be playing a significant role later in the future. I want to give it a different color to emphasize its importance. So we have the 2,675 right here, and we are looking at something that looks like a structural detail that looks like a double top structure on here, which could push price to the downside. So from a long-term perspective, I'm not looking at selling. In the meantime, I don't want to sell in a in an uptrend scenario, so I'm not going to be selling. Instead, I will wait for the sell to come into either this trend line here, where I will be looking out for buying opportunities, or the between the 2,640 and the 2,628, to continue an uptrend move. So of course I will be looking out for reversal setups. It could be double bottom structures, head and shoulder patterns before continuing that uptrend move. However, for scalpers, I am scalping the market down into that structure is looking promising. That's about 120 to about a 250 pips to catch if you want to be scalping this market, of course. And that reminds me, we shall be running the go challenge today, 12 o'clock, 12 p.m. local time, 12 p.m. local time, yes, 11 a.m. UTC. I will be starting the stream, and of course I will be running a live commentary for about 30 to 40 minutes into the opening of the New York session, like we did last week before that break. So we will be doing the same thing this week too as well. So I look forward to seeing you right there. We'll be scalping the market around this particular area. So for now, all I would just say is let's exercise patience. The market is it's uncertain right now, and then we should also take into account that key players will be on alert for both opportunities and risk around this particular area as the major event for the week draws near. So let's see how the market is going to play around here. So I'm looking forward to see price dropping into the structure for me to continue an uptrend scenario. But if there are anything, any interesting structural details that come up along the way, definitely I will be updating us on my Telegram platform. So this is my simple view on the XAUUSD for today. I encourage us to mark out this level, and I will be updating us accordingly on both my TradingView and Telegram platform today. So that is my simple view, everyone. If you have any questions or you need some further clarifications, feel free to let me know in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any before we start rounding off on today's Forex Morning Mastery. Hello, okay, Diana. Good morning to you. It's been a long time since I saw you. How are you doing today? Trust you are doing very well. All right, I'm just happy to see you. Okay, so in the absence of no questions, I guess we are come to the end of today's Forex Morning Mastery. It has been a great moment with you guys. Guys, let's make the number of like tally with the number of people on board. I think we have over 10 people today. Let's click on that like button if you are yet to do so and support the community to grow. Thank you very much, guys, as you do so. So today we were able to take on 3 financial instruments that we are going to be monitoring for this week, which includes the USOILSPOT. We also looked at the GBPUSD, where we're able to identify a simple setup, just like we did on the XAUUSD too. And of course, I reminded us of the go challenge session, where we will be scalping this market today. Hopefully, I hope we can get some significant profit out of this position while we scalp the market, and while we also wait for this structural detail to mature for a swing trade approach. And always remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, let's ensure that we have a well-defined risk management strategy in place, so mitigate any sudden pullback from which may come against the direction we have chosen. very, very important. And for those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we have discussed here today. If you did, you want to be part of our subsequent editions, trust me, the more time you spend with us in this community, the better you get to understand my analytical approach, which eventually can help you develop your own personal trading strategy. So I look forward to seeing more of you. Same time on Friday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets are done and, of course, prepare for the final trading day of the week. So, see you then, everyone. I want to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.